Once again, ladies and gentlemen, welcome to the Village of Bartlett Committee of the Whole meeting for December 19, 2017. I call this meeting to order and ask the clerk to please call the roll.
Trustee Kammerer?
Here.
Carbonaro?
Here.
Deyne?
Yes.
Cabrera? Here. Hopkins?
Here.
Ranky, absent. President Wallace.
Here. The only item we have this evening for our Committee of the Whole meeting is under Finance and Golf Committee Chairman Deyne.
Thank you, Mr. President. The only item up for discussion this evening is the 2017/18 six-month budget review. And again, I'm going to ask Todd, if you haven't left, I thought you left. I looked over there and I saw your seat vacant, and thinking to myself, I don't want to talk about this. I'm leaving. Yeah, thanks for being here.
Oh, sorry. Thank you. I moved over here.
Yeah, I've got you now.
He's been instructed to speed this up, Ray, so don't give him any flack.
All right.
All right. Tonight, again, we're going to do a little more detail on the six-month review. This is going to halfway where we're at, update on projected budget. We've been talking about revenue a lot, and so we're just going to give a little update here in the middle. First, we're going to start with the general fund. This is our main governmental operating fund. It covers, as you can see, the village board, the police department, finance, admin, and those departments, governmental fund. The first thing you notice is that the first column is what our total budget was. Second column, year to date, that's 6 months through October, percent of the budget that we received. Our projection towards the year end, we use 5-year averages, and then the under over. Hope that's not too confusing for you. The under over, the revenues under is not good. The under is good for the expenses. So for the projection of revenues for the general fund, $21,395,000 is what we're projecting. That's $457,000 under budget. The main factors point towards that is again the state sharing of income taxes. The state was going to be, they reduced it by 10%. The Illinois Municipal League is actually projecting that it'll be 11% under what they were projecting. So that's going to be $465,000 below budget. So that's the big chunk there is going to be income taxes being lower than we were expecting. Use tax is down about 2%, $23,000. Telecommunications tax continues to go down a little more than we were expecting, 5% or $50,000. Offsetting this is our real estate transfer tax is up 15%. It's going to be up about $90,000 due to the real estate market picking up a little bit. Building permits is up, also due to the activity. And one of note, gaming tax, 10%, is up $16,000 over what was budgeted. So gaming tax now is $180,000 a year is what we're projecting. As far as expenses in the general fund, $21,903,000 is what we're projecting. That's $362,000 less than budgeted. We have been moving some positions around. You'll see that the first line there, village and administration, is going to be under budget about $100,000. The health officer was moved to the community development department. That's the bulk of it. They also had some positions that weren't filled until later in the year. As you move down, finance department, we're still have not filled an accounting position. In community development, that reflects the health officer moving into community development. Building department, plan review fees again are up. Police department has had 2 CSO officers that were hired later in the year. They also have a police officer position that is open, and I believe that's going to be filled in January. And the streets department, it all depends on the weather. It all depends on the snow. I think we've got one of the lightest winters so far, but last year it started out snowy and it ended up, so I'm not going to say anything about snow. But the $50,000 is in regard to trees. We did spend less on trees than expected. So the total projected for revenue shortfall is going to be 507,000. Way over on the left, 413 is what we budgeted as a shortfall. So we were about 100,000 more total shortfall than we budgeted, which is not bad due to the state sharing being down 465,000. The water fund, we did have a 20% rate increase this year. Operating revenues, I'm projecting the water usage has been pretty close to normal. We actually had one of our warmest, driest weeks, the end of September, which was on that November 1 bill. And so that's not reflected here, but we should be close to budgeted. Expenses are also close. The two big things for water expenses is the Elgin water purchases. It's $4.5 million a year, so Tom has been watching that, and the service agreements for the treatment of the wells is also kind of offset some of the extra we're paying towards Elgin. The $831,000 was planned as far as surplus revenues. That's going towards capital outlay projects. Again, water, sewer, golf, parking, these are enterprise funds. These numbers are based on cash flow, cash projections. They don't include accruals, things like depreciation of the fixed assets and other accruals that you see in the audit at the end of the year. So the sewer fund is based a lot on the water consumption, and the water consumption was good, so we're projecting sewer revenues to be up a little bit. Also projecting expenses to be over a little bit due to extra chemicals that are being used this year. Again, the $395,000, that's going towards capital expenses like the sewer line improvements and so forth. The parking fund is pretty stable. We did have a little bit of transition when we moved to the permit parking. Revenues are going to be pretty close to what was budgeted. Operating expenses are going to be down. We ended up implementing the pay by phone, which has helped to relieve some of the rush on the parking meters. So we didn't replace 2 meters that needed to be that were out of date, obsolete. They either needed to be shut down or replaced, and so we didn't need to replace those. That's reflected in the savings there. And the golf fund, there's a little more going on in the golf fund. Revenues for the golf course, that's the pro shop and the actual golfing, that's a little bit under budget. They are over compared to last year. Conservatively, I'm showing the same number as what they came in at last year with the $1,250,000, so which is just slightly under budget. Restaurant, banquet, midway, those are all showing more activity than what was budgeted. On the expense side, program and maintenance are down due to we have less employees in those departments at this time. Restaurant, banquet, midway are up due to the extra activity, which was reflected in the revenue. So overall, the golf program should be on the positive side, 109,000. Food and beverage is going to be on the negative side, about 91,000. That's where we're coming up with about the 18,000. Again, cash flow is same as water, sewer, doesn't show the depreciation and other accruals. This year, I'm going to do a little bit about our fund balance policy. We've been talking about our fund balance policy a lot. There's a few parts to the fund balance policy. The main part is that we try to, this is for the general fund, we try to have 25 to 35% of our operating expenditures. That's the first piece of the fund balance policy. Our 2016-17 operating expenditures, $21,533,000. That comes right out of the CAFR on page 10, the total expenses. Average increase in the property tax levy is another piece to our fund balance policy, and we have not been raising it, so that That's a zero. We don't add anything for that. Annual current liabilities is another piece. That is the accounts payable. It's basically, the first bills list in May is all accounts payable for the previous year, as well as any other expenses that come in. We have to charge those back as accounts payable, so normally that's over in the $700,000 range. Also, first payroll in May, most of that is accrued back. And so that 900,000 is a round number, which is a little lower than what the actual last year, but it's pretty close for an average. Designated reserves, so if we've earmarked something that's going to be used out of the fund balance, we add that to what the policy would be, and at this time, it's the 1.2 million that we've designated as using towards the police building. And so the last thing we do is compare the actual unassigned fund balance. This comes right out of our CAFR again, page 7 in the balance sheet in the front of the CAFR. And our ending unassigned fund balance in 16-17 was just 10.5 million. So how does that look? This chart, 2016-17 is showing actual where we ended. So we had 10.5 million. The minimum fund balance, 7.5 million. And the top of our fund balance policy with the 35% would be 9,636,000. So as you can see, we are still over our fund balance policy. It has been coming down a little. Then with the projection of using 507,000, it will bring the fund balance, unassigned fund balance, down to just over $10 million. And the minimum, 7,500,000. The higher level of our range, 9,766,000. So we are just about 250,000 projected to be over our fund balance policy. Then in 18-19, you can see them all shift down. Well, that's where we transferred the 1.2 million out. So we take that piece of the policy off. It drops everything down. What I'm doing with the estimating of expenditures, I showed a 2% increase in expenditures, and I left the revenue flat. So 2% is very conservative. It's a $450,000 increase per year, and with the revenue flat, and so that would show, that would increase a use of fund balance of $945,000 for the 2018-19 year. It would bring us right down to the middle. And then by the third year, if there wasn't more increases, and if there wasn't any increases in revenue, and we continue with the 2% increase in expenses, we would be just slightly under the minimum fund balance, just under 6.5 million. So that's a little bit of numbers there.
Really,
You guys are okay with that? That's it. That's the end of the presentation. I don't know if you guys had any questions on the fund balance policy or with the funds. I know everybody's here to answer questions on their departments, but that's it.
Thank you, Mr. Treasurer.
We're going to move 1.2 million out of this fund for what reason and where's it going?
We've designated 1.2 million for the police building.
Okay,
It's going from the general fund to the municipal building fund.
okay.
So as we can all see, if nothing happens in a few years, our fund balance is going to be under minimum guides.
We definitely should not let that happen.
Of course not, I agree. Todd, thank you very much.
Do you think, Todd, just one quick question. Do you think 2% is a good number?
2% is very low,
Yeah.
very, very low, very conservative.
I think that that's too conservative when you talk about the cost of living, general cost of living. So everybody should keep that in mind. That was based on a really conservative increase in cost of operating anything. I don't know any business that can keep operating with a 2% increase every year. the way that prices go up, that you're basically saying that nothing is going to cost the village anything more than it did 3 years ago. And that's not realistic. So we got to keep that in mind when we go into budgeting time. No questions for Dan? Nothing about snow? Do you have any forecasts or anything, Dan? Is that right? You promise?
Save money right there.
Mr. President, that's all we had on the agenda this evening.
Does anybody else have any other discussion?
How much salt do we have on hand, Dan?
Hey, I actually pulled out of my garage this morning and slid into my son's car. My driveway was like icy. I didn't barely slid into it, but I was like, oh, good. And I hear rave reviews about not picking up any brush from staff. Yeah, I think we're going to see some real benefit to that with injuries and everything else, so. All right, thank you, Chairman Deyne. I'll entertain a motion to adjourn.
Second.
Moved by trustee Kammer, seconded by trustee Hopkins. Will the clerk please call the roll?
Trustee Kimmer,
Yes.
Carbonaro,
Yes.
Deyne,
Before I give you my vote, I'd just like to wish staff and all the council members and obviously the residents of our community some very happy holidays.
Yeah.
And I vote yes.
Cabrera,
Yes.
Hopkins.
Yes.
We are adjourned. Merry Christmas, everyone.